top three things in my notebook this morning: the Japanese yen, commodities, and bonds. Now, this morning's an interesting morning. To be quite frank, I feel a lot better this morning because we're back to what the trend has been, which is, again, a stronger yen, stronger commodities, and a shift out of equities into bonds. But on the yen point, specifically, look, you're starting to see a yen breakout relative to the dollar. Now, how many people in consensus macro land are positioned for that? Answer, very few. Now, again, why would that happen? Well, the dollar goes down. The dollar goes down, the yen goes up. It's pretty simple math. And again, the yen strengthening just a little bit, 50 basis points, gives you a lot of pin action to the downside in the Nikkei. The Nikkei was down a full 1.8% on that. And as you know, the Nikkei sucks for the year to date, down 10.8% with the yen obviously leading the global currency war again to the upside. Commodities, number two, had a very good day again yesterday. People are kind of like arguing back and forth. Well, can the S&P 500 be green arrows? Or, give me a break. The reality is that there is no green arrows in the S&P for the year to date because it's down. But commodities are green, and they were up again yesterday. They were up another 50 basis points on the CRB index. That puts the CRB index, which is a component index of 19 commodities, up 4.3% for the year to date, outperforming the S&P 500 by a good 600 basis points. So again, we'd reiterate the inflation accelerating. Top macro theme here at Hedgeye on that. Finally, bonds. Again, as inflation accelerates, follow the bouncing ball. U.S. consumption slows, you short consumer stocks, and you rotate out of consumer stocks into slower growth assets like bonds. So again, yesterday we bought the BND, which is another bond ETF. There's tons of bond ETFs. Darius was going through this with me yesterday. Obviously, there's inverse bond ETFs. You can do whatever you want with bonds, but obviously leaning bullish of bonds and bearish on yields is where we want to go when inflation's accelerating and growth is slowing. That is Hedgeye Playbook 101. So those are your top three things.